Hello and welcome to this masterclass on finance transformation. My name is Mustafa Muchhala, and I am doing this masterclass on behalf of IBS and recording it here in London. To get a certificate for this masterclass, please follow the instructions in the description below. To start off with, we're going to talk a little bit about how global reporting has developed and is developing around the world. And we will introduce a concept of integrated reporting. I say the word introduce, but it has been there for some time. Companies have been adopting it, but it is not compulsory or mandatory for all companies to adopt it yet. And how that has changed and will be changing in the future is what we want to look at. To start off with, we want to first think about why should companies produce annual reports, and this is something is important to understand, and I'm sure you know the answer to this question. Because if you haven't seen an annual report, you must have heard of it. If you have seen one, you may have looked at the important features in it, although you may not have read all of it. But it's still important piece of information that companies produce on an annual basis for their shareholders, right? For their investors to look at, for their employees to know how the company has performed in the last 12 months. For the management to know how they can take the company forward in the future as well. The directors, the board, the chairman, all of them have their reports and their statements within this report. The auditors audit this report, right, and certify whether it is true and fair, right, in terms of the information it gives people. And so it is a public document, and it provides a lot of information for the investor to decide whether they should invest in the company or not, right? It is also important statutory information which companies acts around the world require companies to produce. These days, these reports need to include other elements, and there is a need, right, to include more information and disclose a lot more information to the shareholders, to the investors, to the general public, even to all the stakeholders, the customers, the suppliers, the government even, the regulatory authorities, right? And even pressure groups, the environmentalists would want to know how the company, is sustaining itself. What are its sustainability initiatives? So all of these aspects are important to be reported, and how they get reported in this annual report is something that we want to look at in this masterclass. So the general contents of an annual report, to summarize, is the strategy. So the company would talk about its strategy. The board of directors would basically focus on this strategy and how they are developing this strategy in a business. The company will also publish its financials in terms of how much profit or loss they've made during the year. What does their financial position or assets and liabilities look like? The management will provide statements about what they expect the company to do in the future. This is the key statements which most shareholders would be looking for to try and see whether it is worthwhile remaining invested in the business or not. The business will have analyzed the various risks, right, and those risks may be categorized as well, and also discussed in this report how the business is reducing or mitigating these risks. A lot of future aspects, future prospects, this is the key information that all investors will want to know. To remain invested, they would want to know whether there is a future prospect in this business. And then there is an important piece on corporate governance and corporate social responsibility. You may have heard the buzzword ESG being talked about a lot these days. It is all about the environment, the social, and the governance aspects. And so annual reports already include the governance, the corporate governance aspects, and the social responsibility aspects. Yeah. And companies are now required to, not mandatorily, but they prefer to talk about the environmental impact that their business is making as well. So in terms of this report, what are the developments and how is this report developing? The traditional report that was there has limited information, right? Shareholders and stakeholders want more information. Hence came about the birth of integrated reporting. The International Integrated Reporting Council was established about 4 or 5 years ago. And this Integrated Reporting Council came up with how an integrated report should be prepared, which includes not just the financial information, but some of the non-financial information as well. It came up with 6 key capitals. And those 6 key capitals included, other than what was included in the report, the financial capital, meaning where does the business source its finance from? Who are the providers of finance? Who are the investors in the business? The shareholders, the debt holders, etc. And where is this money coming from? And how much more would be required in the future? The manufactured capital. What has the business done with this money? What kind of assets has the business now developed? Whether they are, tangible or even intangible assets that they have developed, is the manufactured capital. It then sort of expanded the remit to include, human capital. These days, human capital is not, valued on the balance sheet, but there is a lot of talk about how it gets valued. We talk about that as part of the integrated reporting. The social and relationship capital is already included in the traditional report, but that is also part of the 6 capitals. And the governance aspects comes as part of the human capital as well. And then you have the intellectual capital, which is capital that is mainly intangible, right, but does have a value to the business. Now, we don't just talk about these capitals, we actually see how it is practically used by businesses using case studies, right, in the class, in the business school. Yeah. So, overall encompassing all this, right, is the natural capital. And the natural capital is the environment, right? And a lot of, businesses want to talk about how they are being sustainable here in the future. Here, now, and in the future. So we use a case study, right? Recently we've been using Vodafone as a case study. If you look at their 1992 report, it's the traditional annual report compared to their latest 2023 report, which is an integrated report. Yeah, and we look at certain specific aspects of the report to try and understand what is the key information that an investor would require to make a decision to whether they should invest in that business, or even someone who's already, or a company that's already invested, say in a company like Vodafone, would they want to remain invested in that business after reading their integrated report? And that's the case study that we will work through, right, in the class in the business school. We also use a case study of BNDES Bank to look at their integrated report, and they've been producing integrated reports for a few years now as well. There's a couple of different companies we look at, yeah, and industries as well. So just to give you an idea, this is an extract from the integrated report, which shows how the business uses those 6 capitals to create value. So it talks about what the inputs are into the business, right? And those inputs, right, are in line with what the business's strategy, purpose, values are, what their mission statement and vision for the future is, and then links that with what the outcomes or the outputs are in terms of, you know, their financial capital, their intellectual capital, the social and relationship capital, and the manufactured and the natural capital. So basically, this just is a snapshot, right, of, you know, how the company reports on these 6 capitals and provides more information to its shareholders and stakeholders. There's a lot of detail in reports. This is just a snapshot, but these reports are very interactive. They have videos in it, they have pictures, they have key information, lots of key performance indicators like KPIs, etc. And we use those as examples to try and understand the business and make decisions about whether we should invest or should remain invested in businesses like that. So the global report development, we analyze the annual report, and to analyze the annual report, right, we look at how we analyze it, what sort of tools do we use to analyze it, and what limitations are there in analyzing it using those tools. There is nothing perfect, but we use some ratios. So there's a few examples of ratios, and I'm sure you may have seen these before, or if you haven't seen these before, we work through these, we try and understand them. We think about the factors that basically affect gross profit and the gross profit margin in the business, such as the change in the sales price, change in products costs, change in the number of products sold, etc. We also think about the operating profit margin and think about changes in the general costs or one-off costs that might be there that might have reduced or increased the profit. We look at the liquidity ratios in terms of the current ratio, depending on the type of industry, what is the best level of current assets and liabilities that a business should have. We then go into detail about the inventory days in terms of, you know, how long should a company hold the inventory for. Again, depends on the industry that the company is in. Yeah. So a dairy farmer, right, would have perishable products, would not want to hold inventory for a long period. Compared to a wine manufacturer, the older the wine gets, the more value it is. Yeah, would want to hold more inventory. And similar such examples related to the case study that we look at. We then look at the other receivables days. How long do our customers take to pay us, right? So that we ensure that we have enough cash in the business. Payables days, how long do we, you know, our suppliers give credit to us, right? So that we can hold on to the cash and use the cash for longer. Cash, basically very important for every business, and thinking about the importance of that cash and why cash is king, right, in businesses. And then we look at risk ratios, right? We cannot ignore risk. So the risk, right, in terms of how much debt does a company have in its books, on which it has to pay the interest, right? So we look at a ratio called the interest cover, that do our profits cover the interest that has to be paid. We look at the gearing, the mix between the debt and the equity finance in the business, right? And think about, you know, how risky is the business. If a business has a lot more debt than equity, it's obviously going to be more risky because it has to generate sufficient profits to be able to pay the interest and the loan eventually. So we look at some of these tools to try and analyze the reports, right? And it's very useful for those who don't have a financial background, right? And try and understand some of the basic things in terms of how you read the report. So even though you might not read every report, to invest in a business, you may want to read one, right? To remain invested, you might want to know one. If you're sat in a meeting with your managers, the board, etc., and they're talking about the financials, you understand what they are saying. And it's more from that perspective that having a good overall knowledge of how things are changing and how things develop and how businesses and the story behind the numbers can be understood. Yeah. So we do this case study on Vodafone, as I said, and think about, you know, using the financial, you know, the some of the financials, right? And also think about Vodafone's performance and make decisions as a group and present at the end of the session as well. Yeah. We also look at the external aspect, so not just internally within the company. We would look at what's happening in the telecommunications industry at the moment. What is the effect of the events that have happened around the world on the share price? So here in the UK, Brexit had an impact on share prices of a lot of companies. We've had the pandemic, which has had an impact on stock markets around the world. We've had the financial crisis way back in 2008, right? So all of those aspects have impacted share prices, and there are the cost of living, problem that we face these days is another one that has had an impact on share prices of various companies around the world. And thinking about the external and the internal impacts is equally important when you analyze the business. So that's a little bit on how integrated reporting is going to work, and the information that is provided, which allows businesses to think about how they invest or remain invested. There's a few links, right, which you can read using the appropriate websites, which will allow you to see the integrated reports as well. We briefly then talk about the finance function of the future. And the finance function of the future is going to undertake a lot of change, just like all professions are going to undertake a lot of change because of the technological changes that are coming about. So first of all, we all know that there is a lot of data around us. This data, called big data, data that is produced every day through social media, through companies' internal, external data. So there's a lot of volume in that data, and nobody has the time to read all the data. There's also the speed with which the data is being produced on a daily basis is immense, and also there's a variety of data. It's not just written data. It could be, pictures, videos, etc., vlogs. So there's a lot of data. To make sense of that data, right, there has to be, a way to do it. And companies are working on using the artificial intelligence, data analytics, and other technologies to try and make sense of the data and then use that information after processing the data to take their businesses forward. So we briefly look at how the data analytics is going to look at the information that is produced by the companies, how that information then as part of the descriptive analysis is then thought about in terms of what has happened. So you may use, say, a set of financial statements or the annual report that tells you what has happened, right? But, as professionals, as a finance professional, you would need to be able to tell the story behind the numbers and talk about why did it happen. So the diagnostic analysis is very important. Being able to, communicate, right, is going to be more important for that professional. And then take that further and think about the predictive analysis. So now you're using technology and the AI to think about what may or will happen in the future, and then take that even a step further and think about how can we make it happen. Right? So if you want to reach a particular point in the future, how do we make that happen? Right? And that's the prescriptive analysis. So a lot of the AI is being focused, right, in the, about the future is the predictive and the prescriptive analysis. Just to give an example, right, the role of an auditor, right? You may or may not be involved in auditing, but it's just to understand that the auditor role is to provide an independent view traditionally, to collect and assess the evidence right from the accounts and from the paperwork. Now there's no paperwork. A lot of companies are paperless offices, so a lot of information is already in the systems. To be able to use analytical tools to check that information and the accuracy of that information and the accuracy of the financial statements. But more so now, with all this technology coming in, right, the auditor's role is to ensure the honesty by strengthening the accountability, right, and think about the time perspective, right, and also provide some communication and tell the story behind the numbers and ensure that there is good dialogue, right, between the various parties as well, and they're listening to what the businesses are doing. So the role of the auditor is not just a checker, but it's more about being a collaborative partner to try and think about how to take the business forward and, you know, advise, right, the clients to be able to do that. So the finance function, just like, you know, other professions, is going to change with the AI, is what we also talk about and develop, right, and bring about and look at it in the case studies as well as to how those businesses, right, are going to change and what sort of technologies do they use. So that's a quick overview of you know, the two aspects, the integrated reporting and the finance function of the future. So friends, I hope you've enjoyed this brief presentation. Just to remind you again, to get your certificate, follow the instructions in the link below. And I hope to see you all in London at one of the International Business School you know, summer schools, and wish you all the very best. Thank you.